After reading the statement, as always, we will have a question and answer session. But at this moment, I would wish to invite the Deputy Governor to issue the monetary policy statement.
Thank you, Director of Communications. I'm pleased to present to you the monetary policy statement for July 2022. At the extraordinary Monetary Policy Committee MPC meeting held in July 2022, the Bank of Uganda increased the central bank rate, CBR, by 1 percentage point to 8.5%. Inflation continues to rise, largely influenced by external cost pressures stemming from higher global food and energy prices, persisting global production and distribution challenges, as well as rising domestic food crop prices due to dry weather across the country. The annual headline and core inflation rose to 6.8% and 5.5% in June 2022, up from 6.3% and 5.1% in May 2022, respectively. Inflation is forecast to peak in the second quarter of 2023 before gradually declining to stabilize around the medium-term target of 5% by mid-2024. And this is, of course, premised on the fact that in 2022, the inflation was slightly higher than the 7.2% and 6.1% that were projected in June 2022 forecast round. The inflation outlook is significantly uncertain, with the balance of risks tilted to the upside, including global inflationary pressures amidst persistently higher world food and energy prices, a faster shilling depreciation as advanced economies raise their policy rates to control escalating inflation, higher prices in the global markets that could further increase the demand for foreign exchange, US dollars in particular, required to purchase about the same quantity of goods, which may further weaken the shilling. Potential worsening of disruption of global production and distribution due to stringent controls of COVID-19 outbreaks, especially in Asia. Higher domestic food crop prices due to the effect of prolonged dry weather conditions on food harvests. The downside risks include weaker domestic consumption and investment as higher inflation reduces consumers' real incomes and tighter financial conditions constraining private sector access to funding. And finally, escalation of global inflationary pressures could ease much faster than currently assumed, resulting in a decline in imported inflation. The June 2022 preliminary GDP estimates by the Uganda Bureau of Statistics, that is UBOS, indicate that the economy grew by 4.6% in the financial year 2021-2022 from a revised growth rate of 3.5% in the previous year. The economic growth was largely driven by private investment despite imports far exceeding exports. On the production side, the industry and services sector were the main drivers of growth, with some of the services sector activities such as education and trade recovering. However, households and business expectations about economic developments have grown more tepid, and the global economic outlook is highly uncertain. Indeed, the Composite Index of Economic Activity, known as the CIEA, a high-frequency indicator of economic activity, continues to signal a slowdown in the pace of economic recovery in the second half of the financial year. The composite index of economic activity growth in the 3 months to May 2022 decelerated to 0.9% from 2.1% in the 3 months to February 2022. Overall, economic activity is projected to remain modest as the shocks to commodity prices, production and distribution disruptions, and global inflation continue to dim the prospects for domestic economic growth. Economic growth is still projected in the range of 4.5 to 5% in 2022 and rising slightly to 5 to 5.5% in 2023, in part supported by public investments. Weaker external demand, high domestic inflation, and resultant tighter domestic financial conditions will constrain exports, consumption, and investment. The risks to growth outlook, which are tilted to the downside, include weaker global growth, escalation of geopolitical conflicts, heightened global economic uncertainty, and higher inflation. Other downside risks are a further decline in consumer confidence, heightened exchange rate volatility, and weakening investor optimism. Nonetheless, in the medium term, the economy is projected to grow in the range of 6.5 to 7%, supported by public and private investments in the oil sector. While the inflationary pressures are likely to be temporary, the MPC assessed that a markedly higher policy rate is needed to stabilize inflation around the medium-term target. Accordingly, the MPC raised the CBR to 8.5% and maintained the ban on the CBR at plus minus 2 percentage points. The margins on the CBR for the rediscount and the bank rate remain at 3 percentage points and 4 percentage points respectively. Consequently, the rediscount and the bank rate are now at 11.5% and 12.5% respectively. The Bank of Uganda also increased the cash reserve requirement by 2 percentage points to 10% effective 23rd June 2022. The MPC considers that the monetary policy stance will have to be tightened even further so as to ensure that inflation eases back to the target in the medium term. Thank you very much. That marks the end of the statement.